Let's take a look at futures this morning. Right now, we've got a little bit of a mixed story. S&P is flat right now in the pre-market. The Dow is down by 58 points. The Nasdaq is actually pointing higher by 126 points and change. Let's take a look at yields right now because, well, it is Fed day. Right now, the 10-year is at 4.44%. That is just slightly lower there on the yield on basis points. Fed Chair Kevin Warsh is going to make his first policy decision, of course, along with the committee, but he's going to be leading the central bank today. We're going to get that decision at 2 p.m. Eastern time. Now, they're widely expected to leave rates unchanged. This will mark the fourth pause in a row for them, but this follows 3 consecutive rate cuts that we got last year. Let's bring in Wall Street Journal chief economics correspondent Nick Timiraos. Nick, I read your piece this morning. It's great to have you on the program. So obviously, this is a different scenario for Kevin Warsh, as you lay out in your article in the Wall Street Journal this morning, than what he probably expected when he took the job earlier this year.
Well, yes, Cheryl, thanks for having me. And you're right. What it means to be a dove in June of 2026 is different from what it was 6 months ago. The doves at the Fed today are arguing, here's why we don't have to raise interest rates. Here's why we don't have to talk about raising interest rates. It's no longer, prosecuting the case for interest rate cuts. And so that is the biggest change over the last 6 months. That's something that Kevin Warsh is inheriting. It's not, something he's responsible for. That's just the situation that he's walking into. Now, of course, the deal on ending the hostilities in Iran will be significant. It'll take some of the thunder away from hawks, who had been really pounding the table saying, we may need to raise rates here. I think the deal probably eases some of that urgency and some of the hawks' argument at the margins, but Cheryl, only at the margins.
Yeah, well, something else that you wrote this morning in the Journal, and I want to bring this up to our viewers' attention. You say Kevin Warsh wants the Fed to stop explaining everything. And you write how for a long time the central bank believed talking openly made its policy work better, but Kevin Warsh thinks differently, you say. His advice for the Fed last year was, quote, more thinking, less talking. Now members of the Fed committee are polling toward rate hikes. President Trump, who chose Warsh, wants lower rates. How do you see all of this playing out? And also talk about the dot plot, because that's part of the forward communication. Do you think there's going to be changes there?
Yeah, that's right. The 3 things I will be watching this afternoon at 2 o'clock, the statement. Do they drop the easing bias? This is the hint that says a cut is more likely than a hike. That language drew 3 dissents at the last meeting. So that seems like an easy thing to get rid of here because the hawks want it out. And Kevin Warsh can say, all right, we're getting rid of forward guidance. I don't believe in this anyway. So that's easy. Then you have the dot plot, which you asked about. That's the interest rate grid where everybody writes down a dot to represent where they see rates at the end of the year and the next year and so on. Kevin Warsh could decline to participate in that exercise. That would deflate it. And then finally, the press conference. I will be looking to see how Warsh communicates on behalf of the committee, because traditionally the chair has tried to represent the views of the committee, which of course is harder when there is a bigger split.
Yeah, well, certainly we're all going to be watching that press conference this afternoon, and it is going to be interesting to see how he engages. I think he's going to do a great job. I mean, that's just my opinion. I think that he has been waiting for this position for years, and I think he's ready to go, and we'll see what he says and, more importantly, what he does not say. I've got Adam Johnson on set with me. Adam, jump in here. I mean, what are your expectations from a market's perspective today for Kevin Warsh?
Well, I am thrilled, number one, that Kevin Warsh is the new Fed chair. Yes, you're absolutely right, as is Nick. He is very smart. He has been waiting for this job for a long time. More thinking, less talking. That's Kevin Warsh to a T. And I actually have a question for a distinguished guest, if I may.
Well, go right ahead.
Okay, Nick, you are the man of the hour today. Representing the Wall Street Journal. It's great to be able to talk to you about this. I have a theory that as inflation comes down, it's actually going to be easier for Kevin Warsh to cut rates than people think, because I think what he's going to do, and I think he's going to convey this, is to say we're going to pay for rate cuts by cutting the size of the balance sheet. It'll be like a wealth transfer from Wall Street to Main Street. Do you think, number one, that that's reasonable? And number two, if so, how's he actually going to try to pull that off?
Well, I think that's a big question about what he does on the balance sheet. I think you're right in the sense that there's an element of make them sick and then make them well. So you get kind of green in the face seeing these 4% inflation readings at the middle of the year. Last year we went through the same sort of thing. Oh, Liberation Day is going to drive up inflation, and then it didn't, and the Fed was able to come in and cut. So I think there's something to be said for this idea of you make them sick. Geez, inflation looks really high right now. We can't cut, and then it comes in and it improves. I think the balance sheet and getting cuts by cutting the balance sheet, that's a longer run project. You know, you risk creating more volatility at the front end. You think about what happened in 2019 where the Fed was shrinking the balance sheet and had to stop because they drove interest rates way up. They shrunk too many reserves off the balance sheet. And so I think the question is, how do you sequence that? Because there are nonlinearities when you when you drive up LIBOR, when you drive up SOFR, when you drive up some of these front-end rates, and you don't want the front-end rates to trade out of the Fed funds target range. So I think that's going to be the challenge for Kevin Warsh there is you can shrink the balance sheet, but you may have to do it over a longer period of time, and it's going to be a sequencing question.
What's your biggest question right now, Nick, before you go ahead of the press conference today?
What's the outlook for inflation, and what's driving inflation? Is it one-offs? Are these things we can look through? Or do you run a risk here that you get sequential one-offs and pretty soon it looks like inflation? How do you tell the difference? And how does Kevin Warsh see the difference right now?
Nick Timiraos, so glad to have you on the program this morning. It's always great speaking with you and getting your perspective.
Thanks for having me.
We will see you this afternoon at the Fed, of course. Nick Timiraos from the Wall Street Journal.